Will UK house prices rise or fall? That's the question everyone's asking, and in today's video I'm breaking down the latest market data to answer it. Because despite rising arrears, affordability issues and political upheaval, house prices haven't crashed yet. So what's really going on here? Well, today I'm using fresh insights from the latest Propertymark's Housing Insight Report, the latest RICS Market Update, and the latest Rightmove, Nationwide and Halifax house price indexes. And in case you're wondering why the hell you should listen to me, well, I spent since 2013 building a UK-wide home buying company, British Homebuyers, a nationwide estate agency, British Homesellers, that between them have dealt with over 14,000 transactions totaling about £4.2 billion of property. So look them up and take it from me, this year is a big year ahead. So let's start with the big picture here. The Bank of England base rate dropped from 4.75% to 4.5%. The next rate change is May the 8th, and I'd be shocked if it doesn't drop to at least 4.25%, even 4%, dependent on how the Trump tariff situation plays out. Inflation is now at 2.8%, but when you include housing costs, so CPIH, it's still at 7.5%, and GDP fell by 0.1% in January, but it is estimated to have grown 0.5% in the latest February figures that have just come out. So while the headlines say inflation is easing at 2.8%, that's actually quite deceptive because it avoids most people's biggest costs, their homes. In fact, households are still seeing inflation at 7.5% when you add in housing costs, when you look at CPIH rather than the usual CPI that government loves focusing on. So you can see housing costs is really what is making us all poorer when you consider average wages have gone up 5 to 6%. And with council tax increasing about 5% across the UK through this year, unless interest rates begin to drop, that CPIH is only going to get worse. In fact, right now, 32% of UK adults say they find it very or somewhat difficult to pay rent or cover their mortgages right now. Despite this, mortgage arrears have stayed static, but the pressure is still real out there. So let's talk house prices. The average UK home now costs $269,000, up slightly month on month. But when you adjust it for inflation, prices are basically flat. What's more interesting is the sales activity. UK residential transactions were up 20% in February compared to the same time last year. That means despite high rates and economic uncertainty, demand has bounced back. But the caveat to this is buyers have been rushing to beat the stamp duty increase that came April the 1st. So without question, that has given the property market a sugar rush of activity early this year. So don't look at that 20% increase and get too excited about what the future may hold. Because buyer registrations per branch have dipped to 81, but viewing activity has been rising. And positively, mortgage approvals and gross lending figures are climbing, as you can see here, which is really positive to see. From what I'm seeing in my business, deals are being done and confidence is returning. As of end of March, we're actually tracking 33% ahead of this time last year on our sales figures. But the sales market is one thing. What's the rental market doing? Because that can affect house prices. The higher the rents get, the more motivation there is for renters trying to jump and become property owners. Well, the rental market is still red hot. There are 10 applicants per rental property on average. Rents are up 8.1% year on year across the UK. Landlords are listing properties to rent, but not fast enough to meet demand, which is the biggest factor to rents increasing. And while tenant affordability is tightening, rental arrears are keeping towards 2% of properties on the market. And although void periods between tenancies has increased a little, as you can see here, it's still within the expected ranges, currently sitting at just 3 weeks. So it's just not likely rents are going to do anything but go up, which is without doubt going to keep a degree of demand from renters trying to become owners. But what is happening with the supply of property coming to the market right now? As we all know, prices are set by demand and supply. So supply matters just as much as the demand for property. So is supply improving? Well, the average stock per estate agency branch is 59 homes, increasing, as you can see, increasing from the last few months, but broadly the same as what we saw this time last year. My agency, British Homesellers, currently has about 555 properties on the market, spread all over England and Wales. And we've seen quite a big increase over the last 12 months. New listings are ticking up, 10.7 properties per branch in February, so increasing on previous months. But as you can see, broadly in line with the average. And market appraisals are seasonably stable. So the point of looking at these metrics is we're not seeing mass panic sales. If anything, sellers are generally selling at volumes you'd ordinarily expect. But I think what shocks most people I speak to is right now only 9% of properties are achieving asking price at the moment. The vast majority are selling below the asking price. So although properties are clearly selling, a Rightmove marketing price is more often than not more than what the property properly sold for. The thing that is certainly not helping the efficiency of the property market right now is, although completion times are improving, slowly dropping from that painful 17-week average, you can see over the decade it is something that has been progressively getting worse and worse. So it's pretty clear right now that buyers are adjusting to higher mortgage rates, and as fixed rate deals improve, many are going to be making their move. This certainly isn't a booming market, but it's not a bust market either. Here's what I think we'll see from here. House prices will stay flat or gently rise. Rent increases will continue, especially with more and more landlords exiting and fewer homes being available. Interest rates will trend down, improving buyer sentiment, but affordability is still broken. And until we get serious about housing supply, we'll keep seeing the same imbalance for years to come. What about where you live? Are homes selling fast or slowly? Is rent rising or dropping? Drop your thoughts in the comments below. I'll reply to all of them. And if you got value from this video, a like and subscribe would mean a lot, as it helps more and more people see this video, see the real story behind the property market right now. I'll see you in the next video up here.